represent the views or opinions of the staff, management, or ownership of this station. It's time to get on the right.
Oh, what are we doing here today? Let's do a radio show.
Get the answer to your question that's keeping you from taking action and succeeding today. Get ready. The guy that will put your fears behind you is on the air now. Taking calls at 713-785-1817. Toll free 877-881-0271. Now here's your host, Jason Viper.
Hot mics.
Welcome to the show. Jason Bible, Right Path Real Estate. I'm here in the studio. Studio's empty today. It's empty because we are doing our weekend retreat this weekend. We started on Friday. I want to thank everybody for coming out to the event last night. So nothing in the studio because it's all over at the hotel. So it's kind of bare in here. There's not a whole lot here. Everybody's over at the weekend retreat since it's Friday of the weekend retreat. I want to thank everybody that came out last night. I think there were some minds that got blown last night. This idea, and I got a great article this morning I'm going to get to here in a minute. It's another, as Rush Limbaugh would say, see, I told you so. It's another, what's amazing to me is I don't know if it's lies or just, maybe, I don't think it's intentional. It's just what people believe, even, quote, professionals in this business believe that is actually not true. I was tempted to call today's show Judgment is Privilege, meaning it's a privilege to be judged. You'll hear from time to time attorneys talk about how someone is, quote, judgment proof, meaning they are, for all intents and purposes, they're not worth anything. It's not worth it to go after them. There's a national real estate education company that teaches that you've got to have these documents that you have your contractor sign so that if the contractor disappears, you can sue them, you can chase after them. And what they don't understand are most contractors are judgment proof, meaning they have no economic value. So I was tempted to call that the theme of today's show. But then a buddy of mine had sent me an article this morning that is just pure gold. So let me tell you some conventional wisdom that's been conveyed over the last 10 years now that is absolutely 100% false. And here it is. There will be a crash in single-family real estate because Wall Street, who owns a lot of properties, will dump all these properties on the market. And I said that is 100% not going to happen. It won't. First of all, Wall Street doesn't own enough properties to affect a market. Second thing is, they're never getting out of this asset class. Real estate investors live in a pipe dream. And let me tell you what that dream is. They think that Wall Street's going to move into the single-family real estate space, make some money, and leave. I will tell you right now, Wall Street has never, ever done that in any industry. When Wall Street figures out how to make money in Main Street, they don't leave. They don't. They move in, they take over, they buy, and then they leave the scraps to mom and pop business owners and investors like us. Wall Street is only going to continue to be a larger portion of the single-family market. This is a little hard to explain on the radio show, but I talk about it at our weekend workshop. And that is, this is the last generation that's going to be able to generate massive returns in single family. Because Wall Street is moving in. I can see this in every single other type of property type. Multifamily. We have REITs and hedge funds that are all over multifamily. Self-storage, REITs, hedge funds, all over that market. Big REITs. There's some huge REITs that are in storage. Office space, industrial. Every single asset class, even mobile home parks. Sam Zell owns a ton of mobile home parks across the country. Extremely sharp investor. Wall Street is still just dipping its toe into single family. I take a handful of meetings a year from guys that represent Wall Street. You know what their problem is? They don't know how to deploy $500 million in less than 90 days in single family in one market. Yet. This is the last generation where we'll be able to go out and buy a single family house, $5,000, $10,000, $15,000 out of pocket. It cash flow $300 a month. And in 7 years, the price of the house doubles, and we walk away with a $100,000 check. This is the last generation we'll be able to do that. Wall Street hasn't figured it out yet. They haven't figured out how to operationalize this at scale, but they will. I'll tell you this right now. These are not stupid people. Here's the other thing I'll tell you. They will eventually figure this out. And I'll tell you how they'll figure it out. They'll come to a company like Tom and I's, Houston House Buyers. That's our house buying company. And we buy over 100 houses a year. They will come to us and say, hey, boys, we're going to write you a check. We're going to buy your company. And then you're going to teach us how this works in Main Street. You're going to teach us how this business works. And then we're going to improve it. So they'll write us a check. We'll sell our company. And then we'll be on some kind of retainer for them for 5 years. First year or two, we'll probably be in the office teaching all our guys how this whole thing works. And then the next 3 years, they're just going to say, hey, look, we got this figured out. We're going to put our systems in place, make this thing more efficient, put more money into marketing, make our sales guys better. We just need you guys to pick up your cell phones when we call you. And that'll be it. The game will be over at that point. This whole idea, I can work with wholesalers, I can go on MLS, I can go to a networking group and pick up some properties, I can go to a workshop, it'll be over. It'll absolutely be over. You will be relegated to what multifamily is, which is 5, 6, 7 caps on a Class C or Class D property on a not-so-great side of town. When Wall Street steps in, they get the pick of the litter. They absolutely do. And if you guys think this is not going to happen, you are lying to yourself. It has happened in every single asset class, every single type of real estate across the country. Wall Street is going to step in and buy everything. You know what's even you know where the great irony is? You know where they get their money from? Where does Wall Street get their money from? They get it from you. Out of your 401k. They're using your own money against you. Isn't that hilarious? If you're let's say you're a retired teacher, CalPERS, Texas Retirement, it doesn't matter. If you're if you're somebody who's got some kind of retirement in a pension, or let's say insurance, you've got your life insurance, car insurance with a big company. That's who's funding these guys. It's for those of you in multifamily, you're competing against your insurance company and your bank and your retirement account. It's hilarious. We just took our money back. The show would be over for these guys. They need our money to survive. Of course, they also need the Fed with their really low interest rates. However, they do need your cash. Here's the reality, guys. This is the last generation where we will be able to invest in single-family real estate and get some really stellar returns. This is it. Now, is this going to happen in 5 years, 10 years, 20 years? I don't know. But certainly inside of 25 years. Look how fast mobile home park investing changed. Look how fast storage facilities changed. That was inside of 15 years.
1 minute.
That went from a hokey little asset class of people putting junk they didn't want and were being charged $50 a month to a brand new industry that has massive amount of money in it. It is a massive industry now. The question is why? It's simple. Wall Street stepped in. They're going to do that in single family. I have a great article I'm going to get to at the beginning of the next segment. Came out yesterday, literally while I was on stage talking about this. Wall Street landlords are firing up their home buying engines again. We get back from break. I'm going to talk about this article. It's Jason Bible, Right Path Real Estate.
Mike's off.
Are you expecting to close accurately, on time, and with lots of communication on your home purchase? You've come to the right place. I'm Jennifer Hernandez, Senior Loan Officer with Legacy Mutual Mortgage. Our goal is to give our borrowers and referral partners an amazing experience during the loan process. My team believes in putting people and culture before results. Our company concentrates on building those teams who operate with structure, process, and recognition for going the extra mile for you. This way, we have the energy to make
you can bring that in.
best home purchase ever. Give us a call today.
Excellent.
To
Thank
find out
you.
the simple steps to get started. I'm Jennifer Hernandez, the Hernandez team.
I got two
at
LLCs
Legacy
to
Mutual
sign.
Mortgage. Jennifer.legacymutual.com or call 713-579-3611. Again, Jennifer.legacymutual.com. We can't wait to consult with you soon. NMLS
And then we've got this
514497.
one.
Equal Housing Opportunity Lender. NMLS 514497.
Time is money in a real estate deal. If your insurance company is slow or non-responsive, you could lose a deal like that. You need a quick turnaround on quotes or binders? The agency for that is Benchmark Insurance Group of Texas. The team at Benchmark understands the investor mindset. They know what you need and when you need it. We're here for you. Are you a rehabber, wholesaler, buy and hold, or flipper? Bundling your properties on a single policy will help save time and money. Benchmark has been in business for over 10 years, and we insure over 30,000 properties. Contact Benchmark about our exclusive investor package. Call us and let us show you what we can do for you at 281-569-4353. That's 281-569-4353. Or online at benchmarkbroker.com. That's benchmarkbroker.com.
Okay, let's take a look at Har here.
281-569-4353. Or online at benchmarkbroker.com.
Hello, real estate investors. Do you need a lender that moves fast at the speed of a jet to fund your investment properties? Jet Lending will help you purchase properties quickly with as little cash out of pocket as possible. Jet Lending also sets up a repair escrow fund to help you with repair costs. Jet Lending has originated over 2,000 loans in Texas, valued at over $250 million. Jet Lending will help you evaluate your deals for free and give you feedback on value, cost of repairs, and potential loan amount. Jet Lending is your fast and friendly hard money source for first-time investors and seasoned professionals. Call 281-872-7800 or email us at info@jetlending.com. Oh, and don't forget about our famous Third Wednesday Super Investor Networking Meeting. Lots of fun, lots of great real estate
Why would you
talk.
buy this
we'll
thing?
We'll see you there.
Are you looking for an
All
investor-friendly
right, 1
general
minute.
contractor for your investment property? Then call Fast Track
Whoa.
Remodeling at 832-742-9992 or reach us on the web at fasttrackremodeling.com.
Fast Track Remodeling specializes in turnkey remodeling of single-family investment properties. Whether it's a flip rehab or a rental rehab, we manage every aspect of a rehab from start to finish with a highly efficient, standardized process.
Over the last 6 years, Fast Track has completed over 700 projects, which has helped us to create our 3 keys to success.
It's more than 700.
Use
They
a
have to
detailed
update
scope
their
of work so
their
that
show.
everything gets done. Train and
Commercial.
maintain quality crews so
Yeah,
it gets
this-
done right.
they've been having this
and
for a long
complete the
time.
work
I
in a
know, like
proper
2
order
years,
so it
right?
gets done fast.
Yep.
No more managing it yourself, no more doing the work yourself. Fast Track Remodeling really does manage it all.
So give us a call today at 832-742-9992.
All right, we're coming back.
Again, that's
Welcome back to the
832-742-9992.
show.
Or reach us on the web at fasttrackremodeling.com.
This is Business 1110.
All right, hot mics.
Welcome back. Jason Bible, Right Path Real Estate. Oh, let's go over to this article here. Premise of the show is, look, guys, this is the last generation we're going to be able to have fun in single family. I know you multifamily guys, y'all don't have any fun anymore. You get excited over a 7 cap. That's not exactly fun. I got sent a deal yesterday, and this poor investor is getting all hurt on the Facebooks. He's getting his feelings hurt. Guy sends out a deal in the Heights. It's like 15 units, something like that, 2.3 million. It's a 1.3% return on cash. It doesn't even make sense. And then everyone's piled on because I get a lot of people that follow my personal Facebook page that are there's some very savvy investors in there. These guys don't teach real estate classes. They don't have a radio show. In fact, I can't even get them on the radio show. They're kind of like they want to be, just a regular dude. So they don't want anybody to know they're doing all this great real estate. And it's so funny when they comment on my Facebook page because a lot of people don't know who these other guys are, but I know them. I know what their portfolio looks like. I know what they've done in the past. Very savvy folks. And it's so funny to read through the comments. It's one of my favorite things. So you multifamily guys, y'all don't have any fun anymore. Your fun's over. Your fun's over. Your fun ended in 2012. Oh, I blew people's minds last night. I'm going to go ahead and tell you guys this. I love saying this from stage because I love the look on everybody's face. That's what I really love, what I really live for. When I get up in front of a group and I tell them something they didn't know and I can see it on their face, it's just shocking. This weekend, we've got our weekend retreat. There'll be, 100 people in the room. 100 people. And I am sure we're not the only one teaching real estate this weekend. Single family or multifamily. And I am sure there are seminars like this going on all over the city, all over the state from a bunch of carpetbaggers. These are guys that don't even live in the state, don't even live in the city. They fly in, tell everybody they think they know something about real estate, get a check, and then fly out. Some of these carpetbaggers, if you're not familiar with the term, it's an old term from... Anyways, I'll get into... So they fly into town, and they're going to teach multifamily. Everybody's going to get rich doing multifamily. Woo! Get everybody up and screaming and clapping. Woo! We're all going to be millionaires. And then there I am, sitting in the back of the room, and I raise my hand. Yeah, Mr. Bible, what's your question? How many multifamily properties sell in a month in Houston, Texas? And the room gets real quiet. It gets real sober real quick. Before you go into any business, before you go into any investment, the first question you need to ask is, how big is the market? I guarantee you the boys over at Tesla, Elon Musk and the gang, sat down and said, hey, how big do you think the electric car market is? How big is that market? Truthfully, Tesla's not in the electric car market. They're actually in the luxury car market. Those things are 100 G's. They're in the luxury car business. How many of these things do you think you can sell? That's a good question to ask, right? All these people sign. Woo! Let's do multifamily. Yeah, we're going to make $1 zillion next week. Here's the problem. Houston, Texas, one of the largest markets in the country, if not the largest for Class C and Class B, which is the asset classes that you and I are likely to invest in. You know how many houses or how many apartment complexes sell in a month? It's about 7. 7. Here you are. You're at the apartment seminar. And they're getting you all worked up. We're going to make so much money in apartments. Woo! 7. And there's 300 people in that room. 7 in a month. What's the likelihood, even if those people are the only ones in the room that are buying that month, what's the likelihood you're ever going to get an apartment? It's about 0%. 300 to 7. Not to mention all of the investors that are already in the multifamily business. You get left in multifamily, you get left with the dregs. You get left with the worst of the worst assets. I've said this before about auctions at the courthouse steps. I know this happens in California because I know guys that have been out there. I know this happens here in Houston too. If you win at the courthouse steps, it's because they let you. I got a buddy of mine that's got a fund. He's up in Dallas. He's got $500 million in cash. He buys about 80 properties here in Houston, buys about 80 up in Dallas. And if you won any of the properties that they're looking at in Houston, it's because they let you. It's not because you're smart, not because you know what you're doing. It has nothing to do with anything. It's because they let you. Multifamily is the same way. A lot of these assets that are trading right now, the savvy investors have said, I don't think so. They're way too expensive. So you get an opportunity to buy 7 houses a month. But Jason, you don't understand. I signed up with this great multifamily guru. Yeah, and he's terrible at math. There's only 7 of these things available at any one time. That's it. That's it. Don't believe me? Just Google Transwestern Multifamily Houston Report. It'll come up. You can go through and read it. Has all the historic sales volume. Has all the properties that got bought and sold. You bought that multifamily because the more savvy investors said, I'm not paying that. Because they know what the other side of the market cycle looks like. Now let's talk about single family. How many single family houses in Houston, Texas sell in a month? If you include off-market MLS, off-market properties and on-market properties, it's about 10,000. So you've got a choice to make. Listen to this radio show today. You can try and build your wealth with multifamily. Can you build wealth with multifamily? Absolutely. Absolutely. I know some really good multifamily investors. They make a lot of money when the market's right. But they're not buying right now. 7 in a month. You tell me, where do you think you've got the most opportunity to build wealth for you and your family? Multifamily that sells 7 a month, or in single family that sells 10,000 a month? It's real simple math. I worked for this guy named Bob for like 15 years. And one of my favorite things Bob would say is, as compared to what? As compared to what? So you've got an opportunity here to either invest in single family or multifamily. You can fight with everybody else to try and buy one of 7 multifamily properties, or you can get a shot at a handful of properties out of 10,000 a month in single family. That's your choice. I'm not saying you can't get rich on multifamily. I'm just telling you it's a lot harder just based off how few of these things sell. It's hard. Real hard. You could spend your time chasing multifamily deals to make a whopping $40 a door, or you can go buy single family and make $400 a door. I can tell you right now, I can buy single family 50 times faster than I can buy multifamily. Wall Street landlords are firing up their home buying engines. This is from Bloomberg, May 17th, 2018. Wall Street landlords are back in action. Remember, this is the common wisdom out there. It's common. Jason, you don't understand. I always get that. You don't understand. Wall Street's going to buy all these houses, and then they're going to sell all of them at once, and it's going to crush the market. No, they're not. These guys aren't stupid. Do you think the guys on Wall Street are dumb? Now, they may do dumb stuff, but these guys are some of the brightest people on the planet. Do you think they don't understand supply and demand economics? Do you think they don't understand supply side economics? They know they just can't list 10,000 houses in a month. They can't do that. This is crazy talk.
2 minutes.
Wall Street's just not going to liquidate all this stuff. Jason, the next crash is coming from Wall Street. No, it's not. Institutional investors bought more single-family rental homes in 2017 than in previous years, the first increase since 2013, according to data compiled by Amherst Holdings, LLC. This is interesting. I shared with you guys last night during the market update that real estate in Texas has appreciated 7.6% per year. And let me get this straight. Their last big year, institutional investors' last big year was 2013. And in 2017, 4 years later, they're now breaking that record. Despite real estate appreciating 8% per year the last 5 years. Actually, I'll give you a great metric. Single-family real estate has appreciated every single month for the last 70 months since May 2012. I got another question for you. Then we'll go to a break. How long was the last bull market in real estate, single-family real estate? How long was the last run-up in single-family real estate? When we get back from the break, I'll answer that question. I'll finish this article. It's Jason Bible, Right Path Real Estate.
Mike's off.
You found or inherited a great investment property. Problem is, you don't know how much it's worth, or more importantly, what to do to maximize your investment while mitigating risk. This is exactly why we started Next Gen Appraisals. Next Gen is a group of appraisers specializing in investment real estate. We understand that investors aren't just looking for a number of what their property is worth, but a comprehensive analysis of the market. Give Next Gen a call at 713-346-9911 or check us out online at nextgenappraisals.com.
Are you looking for an investor-friendly general contractor for your investment property? Then call Fast Track Remodeling at 832-742-9992 or reach us on the web at fasttrackremodeling.com.
Fast Track Remodeling specializes in turnkey remodeling of single-family investment properties, whether it's a flip, rehab, or a rental rehab. No more managing it yourself. No more doing the work yourself. Fast Track Remodeling really does manage it all.
So give us a call today at 832-742-9992.
Are you a realtor or seller that is concerned about the new TRID rules and closing on time? I'm Jennifer Hernandez, Senior Loan Officer at Legacy Mutual Mortgage, and we have mastered the 30-day close. We close on time, accurately, and with tons of communication. You'll have a dedicated team of a coordinator and a contract-to-close associate. Give me a call today at 713-579-3611 and let's talk about how we can help you on your next transaction. NMLS 514497.
Real estate investors, if you're not familiar with Quest IRA, let me tell you what you're missing. We've got free weekly educational classes, networking opportunities, and the ability to tap into trillions of dollars for your real estate investing deals. Come by our office or join us remotely as we simulcast all of our educational classes every Tuesday morning and evening. For more information, call us at 1-855-FUN-IRAs or visit our website at questira.com.
Time is money in a real estate deal. If your insurance company is slow or non-responsive, you could lose a deal like that. You need a quick turnaround on quotes, binders, and the agency for that is Benchmark Insurance Group of Texas. The team at Benchmark understands the investor mindset. They know what you need and when you need it. It's there for you. Call Houston's leading real estate risk management experts. Benchmark Insurance Group of Texas, 281-569-4353. That's 281-569-4353. Or online at benchmarkbroker.com.
Hello, real estate investors. Do you need a lender that moves fast at the speed of a jet to fund your investment properties? Jet Lending will help you purchase properties quickly with as little cash out of pocket as possible. Jet Lending also sets up a repair escrow fund to help you with repair costs. Jet Lending is your fast and friendly hard money source for first.
When am I coming up to the canyon? We are going.
7800 or email us at info@jetlending.com.
I can't remember. I think we're coming up your way, Ginger. After we get the casita.
Taxes, just the sound.
Oh, Daniel, I'm getting to that quote.
At Anderson Advisors,
I am getting to that quote.
Tax reduction through asset protection for real estate investors throughout the country. Our unique philosophy has CPAs, lawyers, bookkeepers, and estate planners with one common goal: helping you, the real estate investor. Check us out today at AndersonAdvisors.com, and don't forget to tell us you heard about us at Right Path Real Estate.
Are small returns getting in the way of your retirement plans? Why settle for mediocre results? There's a better place to invest. The experts agree. Single-family real estate is one of the best investments you can make. Find out how JB Fund Services offers a 9% preferred return and up to a 13% waterfall. Call us today at 281-915-0906 or visit our website, jbfundservices.com. That's 281-915-0906. This investment is offered to accredited investors.
This is Business 1110.
All right, hot mics.
Welcome back. Jason Bible, Right Path Real Estate. Oh, almost forgot. You guys wanted to know how long was the last bull market. We're 70 months in since the last crash, month-over-month increases. In fact, if you look at median home price in Houston, even in the middle of the worst real estate crash in years, the median home price was still increasing. That'll mess with your mind. The last real estate bull market lasted 182 months. Now, of course, you hear 182 and you're like, how long is that? 182 months is 15 years. 15 years of 6.1% growth per year. Everything I've read, we expect that to continue in Texas. Rest of the country is kind of a mess. But in Texas, we expect that to continue. Look at the median list price per square foot in Houston and compare the median list price per square foot in Chicago, our next largest competitor. And I'll tell you, when someone tells me, Jason, there's a real estate crash coming, I'm like, you have no clue what you're talking about. Rising prices do not mean real estate crash. Jason, real estate's getting so expensive. Yes. They're not making any more of it. They're not. Talked to a buddy of mine, he's a builder. He cannot, and this is his cost. Talked to him on the phone yesterday. He built some beautiful houses. And he said he's got 40 to 50 projects on the ground right now in Houston. And I said, if you don't mind sharing with me, what is your cost to build? He said, all right, this is no profit. This is direct my cost. I'm not getting paid. I mean, this is like break even, right? It's $100 a foot. $100 a foot. So if you're going to build a 2,000 square foot house, his cost is $200,000. That doesn't include profit. It doesn't include the land. It doesn't include all the development for the land. We can't build $200,000 houses anymore. We just can't. It's impossible. This bull market is going to last another 10 years in single family. I'm going to read the rest of this article. I want to get back to that point about how much longer this is going to last. Wall Street firms such as Blackstone Group LP and Tom Barrack's Colony Capital rushed into the single-family rental business when U.S. housing markets were reeling from the foreclosure crisis and homes were available and cheap. The feeding frenzy was short-lived, and by 2014, big landlords were already paring back their purchases as foreclosures dried up and they tackled the challenge of managing widespread homes. We saw this here in Houston. These hedge funds went in, REITs came in, bought a whole bunch of stuff, and they were like, ooh, we got to rehab these things. Oh, we got to put renters in here. And it completely goofed up their business model. But I'll tell you this, they're starting to figure it out. And here's the fascinating thing. Their only way to buy properties is either through foreclosures or as non-performing notes or off the county courthouse steps. They have not done what we've done. But I will tell you this right now, someone is going to buy us at some point. They're going to learn how to do real estate like we do real estate. It's just a matter of time. And when that happens, you guys will not get to play in this game anymore. You'll get to be like the multifamily guys. Pretend like everything's a deal, and it's not. Now they're buying again at a time when single-family landlords are raising rents faster than apartment owners. I'm going to read that again because that's another conventional wisdom lie that you get told from some real estate seminar somewhere. Single-family landlords are raising rents faster than apartment owners. How do you get to raise rents? Simple. Demand is through the roof. That's the only way you can raise prices because of demand. While multifamily landlords face pricing pressure from new supply, very few single-family homes are built specifically for leasing. This is really important. This is another little lie that's getting blown up right here on the show. I've heard for 3 years now, multifamily. It's the best asset class to be in, you understand. And I said, no, it's not. There's all this new inventory coming on the market, and it's Class A, beautiful stuff. While multifamily landlords face pricing pressure from new supply, very few single-family homes are built specifically for leasing. Demand for rental houses feels like it's insatiable. Gary Berman, Chief Executive Officer of Tricon Capital Group, said in an interview. It feels like it's insatiable, meaning there is an enormous demand for rental properties. Single-family rental properties. In fact, in Houston, it's even worse because of Hurricane Harvey. It's even worse. We had a housing shortage before. It's even worse now. Tricon, the third largest publicly traded owner of U.S. rental houses behind Invitation Homes and American Homes for Rent, bought about 850 homes last year. There's another factor driving Wall Street's renewed acquisitions. Now with their businesses well established, the large landlords are having an easier time financing purchases, said Greg Rand, CEO of Own America. The combination of cheaper credit and more efficient operations have made investors comfortable paying higher prices for properties. I'm going to say this again because I get really uneducated, quote, seasoned investors that tell me all the time that single family is overpriced. And I tell them, you have no clue what you're talking about. There is 7, 8, 9, 10% per year of appreciation. You can almost pay 40% more for these things, and they're still going to make money in the long run. And the question is why? The combination of cheaper credit and more efficient operations have made investors comfortable paying higher prices for properties. What does that mean? It means they're getting better. Wall Street is figuring this out. They're getting better. And how are they getting better? With a combination of cheaper credit and more efficient operations. They're figuring this thing out, guys. If your cost of capital is lower and the asset class has been proven, you don't need to buy at a big discount, Rand said. If your cost of capital is lower and the asset class has been proven, you don't have to buy at a big discount. They were buying at big discounts a couple of years ago. Now they just don't care. They don't. And if you think that Wall Street's ever going to stop buying, it's a delusional thought. They have just gone through the prototype phase. Took them about 5 years. They really started in 2012. I've got the quote. It was February 2012. Warren Buffett was on Squawk Box, opened his big fat mouth and said, you know, if I could figure out how to manage 100,000 rental properties, I think that's the single best asset class in America right now. All these REITs and hedge funds came out of nowhere. Do you think all the richest guys on the planet aren't watching what Buffett says and what he does? I can bet you they do. And they're all here.
2 minutes.
There will not be a crash from Wall Street liquidating single-family houses. There will not be. Wall Street is in this asset class. They are here to stay. They are figuring this game out. And when they do, you'll be happy with 5 and 6 and 7 and 8% rates of return like the multifamily guys are. Or you could start buying now and enjoy some massive returns. Massive. And the only reason you're getting those massive returns right now is because Wall Street hasn't figured out how to buy 4, 5, 6,000 houses a month in Houston. They will, trust me. They will figure this out. If your cost of capital is lower and the asset class has been proven, you don't need to buy at a big discount.
1 minute.
I can see in the future. When in the future, I don't know, but this will happen in the future. That you will have a fund or a REIT or a handful of these guys in every major market across the country. And if the property looks like it remotely will cash flow and it's on MLS, they will just straight up buy it. And you'll never get a shot at these things. We get back from the break. I'm going to finish up with this article. We'll talk more about the markets. Jason Bible, Right Path Real Estate.
Mike's off.
You found or inherited a great investment property. Problem is, you don't know how much it's worth, or more importantly, what to do to maximize your investment while mitigating risk. This is exactly why we started Next Gen Appraisals. Next Gen is a group of appraisers specializing in investment real estate. We understand that investors aren't just looking for a number of what their property is worth, but a comprehensive analysis of the market. Give Next Gen a call at 713-346-9911 or check us out online at nextgenappraisals.com.
Hi, Clint Coons here, attorney and avid real estate investor. You know the greatest mistake real estate investors make is not understanding.
You know, Ginger, part of the problem is you sent them a message yesterday about a deal and they haven't gotten back to you yet.
Business, legal, and tax advisors, we specialize in protecting real estate investors in all 50 states. In addition to structuring your business for optimum protection, we provide guidance so you pay the least amount of taxes available.
Oh, David, yeah. I was. I'll tell part of this story here. A buddy of mine went to go work for one of those real estate clubs in town. And we were chatting. This was like just as we were starting Houston House Buyers. And I said, yeah, you're a lot like me. You'll end up getting fired over there. Because they don't want that kind of truth. They don't want the truth.
4741 and mention Right Path Real Estate.
Ginger, I think we're coming up in Thanksgiving. I don't know if Sarah's listened to this.
Due to our expansive soils
Let me see if I can find.
Probably not a question of if you have movement, but when. Call Foundation Check for a truly independent, unbiased foundation evaluation. Foundation Check has been in business since 2009 and has completed over 1,400 evaluations. We're not in the business of repairing foundations or selling you unnecessary peer work, but we are in the business of evaluating your foundation. Our product is designed for house flippers, landlords.
Oh, yeah, we're going Thanksgiving week, Ginger. So we'll be up there.
Files is reviewed by a licensed engineer. Remember to check before ever repair. Call 346-702-3825. That's 346-702-3825. Or you can reach us online at foundationcheck.com. That's foundationcheck.com.
Did you know that there are over $24 trillion in retirement accounts in the U.S.? Imagine if you could use someone's IRA to fund all of your deals. Well, you can. Quest IRA is based locally here in Houston, Texas. At Quest IRA, we offer retirement accounts that can be used to invest in real estate, promissory notes, private entities, and much more. Many of our clients loan money from their IRAs to fund real estate deals all over the country. We don't sell any investments or give advice. However, we do hold free networking events, weekly educational classes, and free consultations with an IRA specialist. For more information, visit our website at questira.com or call us at 1-855-FUN-IRAs. To tap into the $24 trillion in retirement accounts in the U.S., call Quest IRA at 1-855-FUN-IRAs or go to our website, questira.com.
Are small returns getting in the way of your retirement plans? Why settle for mediocre results? There's a better place to invest. The experts agree. Single-family real estate is one of the best investments you can make.
Oh my gosh. You know what's funny? I don't know if you guys noticed this, but I'm seeing price increases on MLS.
We're coming back.
Okay.
Or visit our website, jbfundservices.com. That's 281-915-0906. This investment is offered to accredited investors.
This is Business 1110.
Whoops. All right, hot mics.
Welcome back. Jason Bible, Right Path Real Estate. I don't know about you guys, but I'm seeing, there's a couple of neighborhoods I follow here in Houston. My wife and I are building our rental portfolio, along with building our flipping business and everything else. And one of the things I find fascinating is I get alerts through MLS, through HAR, whenever a status on a property changes. And it's becoming more commonplace that I'm seeing price increases. In other words, the house gets listed, and then they, I guess after a couple of days, they realize the price is too low, they increase the price. It's pretty fascinating. It's very, very fascinating. Wall Street's in this business. I don't know how many years you got, but they're figuring it out. They've gone through the prototype phase. Now they're going to start buying like banshees. Or they're going to start buying house buying companies like us, and then they're just going to grow like wildfire. They could easily 10x my marketing, and it wouldn't even faze them. They could spend a few $1 million a month of marketing, and that's a rounding error to these guys. If you want to build wealth with real estate, Best place to learn how to do that, to get trained on how to do that, is at our weekend retreat. We're selling our weekend retreat right now for $197 through the month of May. That will end in June. We're making big changes to Right Path in June. If you are interested in signing up for our class, it's a whopping $200. Go to rightpathrealestate.com, or you can send an email to Veronica, support@rightpathrealestate.com, and sign up there. So this is it, guys. This is the last generation. I'll tell you right now, 10 years from now, 15 years from now, if I'm still on the radio show, we'll be talking about, wow, you made a 7% return on that deal. That's awesome. It's not. It's horrible today.
2 minutes.
I mean, average cash on cash returns just in our group are somewhere between 15 and 20%. Add on top of that, 7, 8, 9% of appreciation on a leveraged piece of real estate. You're talking about way north of 20%. Some of these houses are doubling in value in 5 to 7 years, if you know the right neighborhoods to buy in. Imagine that. If you had gone down, there are neighborhoods in Sugar Land, if you had gone down and bought those little houses southeast, east of 59, before you get into Missouri City, those little 1,000-square-foot houses, those have doubled in value in 7 years. They went from 100 and some change to over $200,000. I mean, if you bought 10 of those 7 years ago, your net worth right now, just in equity in those properties, would be $1 million.
1 minute.
And buying 10 houses is not exactly a full-time job. It's pretty easy. It's less than one a month. And we buy 10 a month, so I can tell you what one a month looks like. It's not that hard. If y'all want to get trained on how to build wealth with real estate, we're it. We teach flipping, wholesaling, lending, and buy and hold properties, how to be a landlord.
30 seconds.
Go to rightpathrealestate.com, or you can shoot an email to Veronica, support@rightpathrealestate.com. She can get you signed up for our next weekend retreat, which is actually today. So we'll see you guys in June.
20 seconds.
I want to thank everybody for listening. I will be back on the radio show Monday, do a wrap-up of the weekend retreat. Anything else that comes up in the news, I love being right.
10 seconds.
It's Jason Bible, Right Path Real Estate. Thanks for listening.
All right, Jay, have a good one.
All right, thanks.
You've been listening to Right Path Real Estate Radio. Find Jason and Tom at rightpathrealestate.com.
Hey, this is Mark Conley from the Lone Star Money Resource on moneyresourcemedia.com.